Brown Show, where we talk about all things investing, options trading, and the like. Now here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back. Episode 159 of the AJ Brown Show. My name is Cyprian Francis, and with me, as always, the head honcho, the smartest man I've ever met, Mr. AJ Brown. How you doing today, AJ?
That's a compliment. I'm cold. It's cold on the East Coast.
Yeah, I was watching Thursday Night Football last night, and it was like a snow bowl. So the seasons are changing. The political landscape is changing. However, I feel as if the sentiment is still very, very positive going into this week. What is your biggest takeaway of the markets? What are you seeing? What do you want to begin with? We're still kind of at these highs on the S&P.
Yeah, I think what we're going away with is I think the term is resiliency, right? Resiliency. They're seeing resiliency across the board. If we take a look at what the Fed has been talking about, the Fed has been out there canvassing all week, talking about how they're not in any rush to drop rates any further. You can see here, this is investor expectation that there'll be another rate drop. This was at one point up around 90%, and now it's down almost at parity with no rate drop. I have a feeling, Sip, that with all of this increase in the bond yields and with the equities market getting its feet going again, crypto out of this world, gold is back up. I have a feeling that the Fed ain't going to be dropping rates like we thought they were in December.
And in that a hold is that what the bar to the right is? Is that where nothing's going to happen? Essentially 44%.
And this is going up by like 5% every week. It's if we take a look back at this number, this is the target rate. This is the current. It was down at 38.1 a week ago. A month ago, it was at 28.7. We could take a look really quick. One of the things I like to look at is a ratio of the 10-year to the 3-month. So the 3-month bond is definitely one that, because it's closer to what the Fed rate is, because it's so quick to turn around, whereas the 10-year bond, that bond that mortgages are based on, that actually floats based on external pressures, right? So we can look at this ratio. We can even look at the individual bonds, but you'll notice that this ratio has gotten closer and closer to parity in just the last couple of months. Actually, let's take a moment and let's take a look at just the 10-year bond, because a lot of people have been saying, hey, the Fed has been dropping rates. Why aren't we seeing our mortgages go down even further? In fact, some mortgage bankers are actually, bringing rates back up. If we take a look at that 10-year bond and how it's been trending, the 10-year bond is more about what investors expect inflation to be in the future. And when I take a look at this 10-year bond, it's coming up extra slow. I mean, we had this moment in September, I would say, where, mortgage rates were coming down. We had expectations of the Fed dropping short-term interest rates, but that's all but gone, right? We're almost back up to what our highs were in April and May, which basically means, buckle down. Inflation is starting to get out of control again.
So does this mean that we're not necessarily looking for the Fed and the rate cuts to keep the market up, like to keep the market moving up, because the market, it seems to naturally be driving up, whether it was like the Nvidia earnings, or there's a lot of crypto names that are driving up some of those tech sectors. And I know last week we talked about, well, if we don't have anything on the economic front, we get through the earnings season, we're heading into a new year. We're not going to go up. We're not going to go down. We're going to stay in the sideways chop areas. We did some retracement on that. Are you still confident that that's more likely than not?
I think the only thing I'm confident about with the markets going in through 2025 at this point is uncertainty, is unpredictability, is be on your toes, because I don't think we can forecast anything. We were on a path, but I think that that's all been thrown out the window here. We've got a lot of, we asked for it. We wanted change. So things are going to change, and that, change never brings on consistency or predictability.
Every time I keep looking at the markets and we get a pullback, I feel like all the buyers are coming in. We did touch the 6,000 on the S&P. We did pull back. I forget what level. I think we talked about a little bit of a lower level, but it seems to have caught a little bit of support there at, looks like 5,900,
Absolutely.
and
And
now
we
we're
just in theory last night we confirmed a bottom. Let's take a look at some of our charts here on the S&P. I'm going to zoom in on this latest rally here that we've been in. So last night we in theory confirmed that the bottom that we had last Friday, the low that we had last Friday, was as low as we're going to go. However, some of these confirmations have been weak confirmations, especially as of late. So this one's still considered a weak confirmation. We need to see some more move up. Otherwise, this could be kind of a fake out. We would have wanted to see price come all the way down to this ascending line of support. It didn't yet. And that's why I'm also questioning whether or not this was actually the bottom being found, or if indeed we've got a little lower to go. But yeah, in the last couple of days, we've been moving higher and higher. Looks like we might hit that 6,000 level again, depending. I mean, I don't know. Yesterday and today were sort of stall days so far. Yesterday was definitely a stall day. The day before that was a stall day. These are called doji price patterns, where the open and the close are pretty much at the same place. Yeah, there's been some gapping, and there's definitely, when we see this doji, but we've got this long low, it usually means that, the bears come in the morning, and then the bulls beat them back, right? And that's a typical bullish signal. But today's, so far, I mean, we've only been into the market for about 90 minutes, but so far today's bar is kind of lackluster as well. So it's why I'm questioning whether or not last Friday's low is as low as we're going to go in this current move. All to say, I think that I was on a multi-speaker event yesterday. I was part of an event that Synergy Trading sponsored. It was actually a really good event. In fact, a lot of times I'll just come in and I'll do my presentation and then I'm out. But I actually sat through a couple of other people's presentations, and these were people that I've actually picked out over the years that, I think are very competent co-teachers in the space, not just fly-by-nights. And it was very interesting that they all sort of agreed that the analogy I heard that was really good was that it's like a little kid right before they go to bed. And I know this just because of my 3-year-old toddler. Right before bed, something happens, and this kid, like, I don't know if she drinks 3 cups of coffee or what, but she's like bouncing off the walls. It's the last hurrah before collapsing and falling asleep for 12 hours straight. And I almost feel like we've got one last hurrah. And I said that last week, but that analogy that I heard yesterday really brought it home, that we're probably going to have one more big rally, but then possibly instead of this sideways chop that I thought we were in, I wouldn't be surprised if we have some pullback, if we have some inflationary and recession issues. When inflation gets out of control and employment starts to dwindle, that's where the Fed becomes helpless. And so I wouldn't be surprised if 2025 we don't go back to raising rates.
And another just interesting statistic is the year-to-date return on the S&P comparatively, because I mean it's up there in the 20 percentile range, and that's a pretty big move on an annual basis to sustain another year of that. So I think. Go ahead.
If you look at I was just going to say, if you look at the average S&P 500, it's 7%, right? So when you have a year that's 20%, that's 3 times the average. That's definitely not sustainable. But I think a lot of people are being wooed into the markets. It's called fear of missing out, FOMO. It's one of the most powerful psychological things happening in the world. My neighbor's making money on Nvidia. My other neighbor's making money on Tesla. How can I be missing out? So we're seeing a lot of money jumping into the markets that otherwise wouldn't have been there. And, again, that's not sustainable.
So my question to you, and I mean, I know the answer because, we've been doing the show for, almost 3 years now. And that is, I'm an investor. I have a portfolio. I've enjoyed this run up. I'm a very happy camper. But if it's not going to continue to the upside, we can use a tool. We can use a strategy, some of your premium selling strategies, to lock in some of these gains, protect ourselves if we see that pullback. Is this trend? Is this setup kind of validate some of the stuff that you're doing with the premium selling?
Absolutely. What we've been working on in our program is called, collaring. And collaring is where you sell an option to the top side, take the proceeds from that option and buy protective options to the bottom side. And it makes it so that, you remove all the risk out of one of your trades. And so we've been practicing and reviewing and discussing collaring for like the last 5 or 6 weeks, because collaring is what's going to be, the saving grace for any sort of, surprise move down.
And we'll go ahead and go through a couple examples later in the show. I know we've got your pick of the week. We'll break down how to utilize some of those premium selling strategies. We've also got our speed round. We're going to take a bit of a break right now, and we'll come back to talk about, although I do see you pulling up the VIX. You want to run through the VIX real quick before we take a break?
I mean, this is another really interesting thing. So the VIX did bottom, right? But the VIX is holding, right? And so option traders themselves are kind of on that bullish flavor right now. But again, even option traders can flick on a dime. The VIX bottomed out over here. I guess it was on November 13, but it's nowhere near that dotted line mean. So, I don't know when that crying baby is finally going to go to bed, but the energy is high right now. So, trailing stops or trailing triggers to collar, these are the things that are in my mind, just because I like to go to bed without white knuckles. I like to go to bed without having to worry about what I'm going to wake up to.
Yeah, I think you often refer to yourself as the laziest trader around, something like that, right?
Well, I think my peers call me the laziest trader. I think I'm the most efficient trader, meaning that I lock in my gains, but I also spend as little time as I have to in front of the computer screens, right? I have so many other things, whether it's my foundation that I run, or whether it's the toddler running around my house, or the trapeze stuff that's going on. So I like to minimize my efforts, maximize my gains, and also minimize my risks. So I call myself the most efficient trader. I think the headlines say I'm the disciplined trader, and yeah, I think my peers think I'm a little bit on the lazy side, but my bank account doesn't agree with them.
Yeah, and lazy, not in the negative way, in
Right?
the you got your systems, you got
I
your
got the
programs
systems in place.
doing what they got to do so that you can enjoy life. And that's, one of the reasons you created Trading Trainer. One of the reasons you do the show is to educate and get some of the new viewers, the new personnel out there in the world interested, asking a couple questions. I know that when we first started working together, I was not very familiar with options, and I know a little bit more now, and I see the value, and I love educating any new person that I meet in terms of, hey, this is how you can protect yourself. These are some of the premium selling strategies. And with that, we want to give everyone access to some of your strategies, access to some of your indicators, some white
Mm-hmm.
papers. I've got a link here to the free web portal for Trading Trainer. So I'm going to go ahead and throw that into the chat. Also, just so you guys know, we're streaming live if you don't already know that. So if you out in the inner sphere have a name that you want AJ to look at and give you some analysis on, feel free to throw it in the chat. Otherwise, we've got his pick of the week. We've got some speed round names, and we've got some premium selling strategies that we're going to go over. So we'll take a short break here. We'll be back. We'll talk about a little bit of crypto just because it's hot on the news cycle. Sit tight. We'll be back in a jiffy.
Get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
So there was this tweet, AJ, this morning that caught my attention, and I was, I wanted to know your take on it. But essentially, Nvidia is no longer the best performing stock in the Russell 1000 over the last 7 years, with a return of 3,420%. MicroStrategy has surged past Nvidia to take over the top spot. And the funny thing is nobody really knows what MicroStrategy does as a company, but they bought a lot of Bitcoin, and they've been talking about how much Bitcoin they have. And with Bitcoin's run up to 100,000, their stock price has kind of tagged along. Have you been watching this? What are your thoughts? We thought 100,000 might happen, but it happened rather quickly in the last 3 or 4 months. Would you not agree with that?
Yeah. So, the crypto traders are really happy with, the United States deciding to go the way of Trump. So, I think there's a lot of bullishness just in kind of the hype. And yes, MicroStrategy, the company, is very Bitcoin leveraged. So, again, the the common sense guy in me tells me that this stuff is not sustainable. I mean, crypto in general is, just vaporware to begin with. So I'm not one of those crypto bros that is a big fan of it. I'm going to say the same thing, right? You want to have lagging triggers. Sometimes if you're just going to get out of it, it's called a trailing stop. But I like trailing triggers because trailing triggers trigger me to put on a collar. And I like the collars better because collars take advantage of any additional gains, but also protect me from the bottom side. And they're more predictable than stop loss orders. They can really hedge risk down to the penny. So Yeah, I just don't think it's sustainable, but you can't deny the run up.
Is it part of the stochastic shock discussion that we've had, that the movement is just being driven by things that aren't very natural?
Oh yeah. Yeah, I would call this a stochastic shock. I don't know if it's transient per se, meaning I don't know if it's temporary. Typically our transient external stochastic shocks have about a week lifespan. I think this is just an external stochastic shock that might have more like a month or 2-month lifespan. But there's folks driving this price up. And then, like I said, there's a whole bunch of FOMO kicking in with Bitcoin, especially. And all the cryptos. I have some friends who just dabbled in things like Dogecoin, and Dogecoin is up, right? The one that Elon Musk talked about, years ago, and that thing is up just on kind of hype. So just beware of profit takers, right? I feel like where you don't want to be is one of these folks who invests your whole portfolio into something like this, thinking that it won't have an end, right? And who like to they like to dip in with the losses and think that it will return. I have a feeling that some of the big money investors who are part of this are going to start taking profits in the month of December. So we're going to see. But in the meantime, just have those trailing, whether they be stops or triggers for things like collars. You could collar that MicroStrategy stock and wind up winning big on having that protective put in place. So, just be smart about it.
Another news headline that caught my attention that was kind of in line with what we were just talking about is NVIDIA in general. NVIDIA had earnings yesterday, and I know previously the earnings really moved the market, but yesterday specifically, and we've talked about this a few times on the show, is the anticipation of the move in from earnings was like 11%, and it ended up being like 2 or 3. And so that was surprising. Did you keep an eye on earnings? Did you look at any of the NVIDIA stuff? I guess maybe we could pull it up and see if you have any feedback, because it continues to be in the news every single day.
Right. I had friends who did that same strategy, not me, because NVIDIA is one of those stocks that it's a little bit too popular for me to be interested in for my everyday trading. Now, I do have a lot of NVIDIA in my portfolio. I should say my wife has a lot of NVIDIA in her portfolio that she bought over a decade ago, and it keeps splitting and it keeps growing, and she's one of the happiest campers out there. But for a lot of our friends in the trading world decided to do that calendar spread that we've been talking about in NVIDIA. And because NVIDIA didn't really move in its stock price, but the buildup in hype was so intense in the option price, these folks like doubled their money overnight.
Because it didn't move as much as
Well,
anticipated, right?
if you remember that calendar spread trade, what it likes to do is it likes to respond to volatility crushes, but it also has this side effect that it'll respond to, big movements left and right, and it won't respond well. It responds positively to, volatility crushes, which is what we got. We had this buildup of volatility the day before, and then the day after, it just crushed ZIP. People were getting rid of their options left and right. They were like, it was like one of those game shows where NVIDIA didn't do anything after earnings. And so they were like, we better get rid of these options. And the price of the options just dropped. So those calendar spreads went through the roof. And the only thing that makes those calendar spreads like diffuses how much they go through the roof is if the stock price moves. Well, Nvidia didn't move. So this was like the dream scenario for those calendar spread traders during earnings, which was the stock really didn't move much from before and after earnings, and the volatility crush was immense. So yeah, it wound up, paying out like 2 to 1 on this. If you put in $100, you wound up making $100. If you put in $100,000, you wound up walking away with an additional $100,000. So this was like a really nice overnight trade.
Yeah, I kept seeing it in the news, and it always brought me back to some of the episodes on our short show when we've talked about the rushes and the crushes, and so
I mean, we
that's
can
great
even
to
look. Do
hear.
you want to take a minute and look at it? Let's take a look. So if I come over here and I look at some of these options, what I'm going to do is I'm going to look at when was it? It was a couple days ago. It was November 20th, right? So actually, you know what we should do? We should use our options lookup tool. The options lookup tool, I always get afraid using the Thinkorswim tool just because it hasn't been accurate. So let's just pull up our options lookup tool here. It's taking a little bit of time here. There we go. And come over here, options lookup tool. NVDA. And yeah, that's all we need. So what we're going to do here with NVIDIA is we'll look at this November 22nd option, and let's look at it yesterday's price. So compare yesterday's price. We'll look at this. It doesn't matter. 146. So this thing was $1.97. Let's now look at it the day before earnings. So let's go one day back, November 20th. So $1.97 versus what strike price were we looking at? 146?
40, something like 40 something.
Well, it went from $6.28 down to $1.26. So talk about a volatility crush, right? Let's compare that one more time. So we'll come over here. We'll look at this round number, 145. $6.80 the day before earnings. The day after earnings, here's the 145, $2.59. So it dropped by over half its value. I mean, that blew people's portfolios. Anybody who knew how to, profit on that blew their portfolios out of this roof.
So essentially, I'm selling the day before. I'm selling contracts at 6. Earnings come out. Everyone is happy that it's not going one way or the other. The risk lessens. Now I can buy that contract back for $2, and the difference is, I mean, that's like 48 hours. Pretty darn good move.
Not even 24 hours. It's more like 18 hours, right? You do it like 3 o'clock in the afternoon, right before earnings, and then the next morning, 9:30, 10:30 in the morning, you get rid of the position. So I always tell folks with options, you can always figure out a way to be on the correct side of the equation. So basically, people were buying options the day before and driving that price up to $6.80, right? And so we were selling them at that high price. We made sure we were on the correct side of the equation. So we were making $6.80 the day before earnings. Then on the day after earnings, when it was time for us to go ahead and buy those options back, they were selling them and we were there to buy them. And we were like, I'll pay as little as possible. And so $2.59 instead of $6.80, we get to keep the difference.
And we have a couple good videos of similar breakdowns of what AJ just described on our YouTube channel. So
this
head
was
on
like
over there.
The textbook. The only reason why, I wasn't attracted to this is just because NVIDIA is always in the news. And, we didn't know. We didn't know if NVIDIA was going to respond or not. But it turned out that investors were, listened to the earnings and was like, ho hum. And so price didn't change, but that, fear ahead of earnings became confidence after earnings, and that's what the calendar spread traders profited, immensely on.
I think some of the takeaways from the earnings were like, "Hey, everything's good. Everybody wants our chips. We just can't make enough of these things."
Yeah. Yeah.
Yeah, earnings season is starting to wrap up here. So some of
Sure.
these strategies will be a little bit more limited in the remainder of the year, but that doesn't mean that we don't have other ways to approach some of the markets, some investment strategies. I know from being a co-host on the show, there's 28 different ways to trade options, and we like to review variations of that with our speed round and our pick of the week. So, AJ, now that we're about midway through the show, let's dig into an example. Let's go over something that you're looking at, something that has some potential to execute these wonderful premium selling trades on. So, this week, you're looking at a new name for me. This is Will Scott Holding, ticker symbol WSC. What do you like in the setup here? How are you thinking about potentially playing this?
All right. So Will Scott Holdings, they're a company that focuses on, turnkey office spaces, turnkey classrooms. They build things up so that there's places to meet. And I think they're based out of Phoenix or something like that. I got turned on to this stock yesterday by one of my program participants. I mean, look at this pattern. This is like the pattern that we really want to see. Sideways, boring, sometimes, the earnings hit or miss, but this pattern of having a nice tested level of support, having a nice tested level of resistance, this gives us the chance to set up one of these income trades. By the way, you mentioned you never heard of this company. It's one of those companies that's doing something out there, right? They're providing a service. They're a company that's probably not going to go away anytime soon. And yet you don't hear about them. Not many people know about them. They're boring. And guess what boring means for us premium sellers? It means ongoing income. It means this is the type of company that I am looking for, ones that aren't in the news. So the signals are fantastic. If I switch my software over from the indicators that we have, and I'm just using the same free indicators that I give everybody through signing up in the web portal. If I just turn some of these on and turn some of these off, these other indicators that I've got on here are really good at looking at the broad market. But now that we're looking at individual symbols, I'm just going to turn them off. There we go. You can see I just got a signal that a bottom was be found. And you can see here, I'm using the Fast MACD. The Fast MACD is giving me some really nice signals that I can go ahead and react to, right? So I just got found that a bottom, I just got a signal that a bottom was found. It's coming today, which means I don't want to trade it today. I'll probably want to wait and trade it till on Monday and make sure that there's follow through. But this is a perfect opportunity to buy this stock. Now, there's one thing that I got to warn some folks about regarding this symbol, and that is the liquidity is a little bit challenging. So, that means that the bid-ask spreads are a little bit farther apart, not outside of the realm of my interest, but like, for instance, I wasn't able to find a substitute option. So you got to use the stock here in order to start the trade. So when it's at this bottom, and if we get this confirmed, I'd want to buy some stock, and I want to buy it in lots of 100 in anticipation of when I get back up to this level of resistance. That's when I'm going to go ahead and sell my premium, buy my protection, and start that process of turning this into an income generator. But this one's been a consistent income generator over the last 6 months. You just play it cool. And yeah, this one looks like it's going to work out to be a nice one. I'm going to keep my eye on this one. It's on my watch list now.
Yeah, I love whenever we have a holding company because it could be so many random things in that business, and it looks
That's
like
right.
yeah, they mobile offices, spaces, restrooms,
Yep.
storage containers. So they're building container things,
Yep.
which I imagine will continue to need a demand. There'll be a demand for that. It's
Absolutely.
not going away anytime soon. So, that's your pick of the week. AJ's pick of the week. Will Scott Holdings, ticker symbol WSC. Nice little setup. We'll keep an eye on it. Maybe review it in the next couple of episodes. All right. Got a couple names from the users, AJ. They want to know what your take is. Some exotics, some not. Let's go ahead and start with Trish in Denver, Colorado. She wants to know, what do you think about Himax Technologies, ticker symbol HIMX? While you pull that up, I'm going to look at what this company does.
Hey, man, they're auto electronics. Check them out. Remember the supply chain issues and how the big thing that was holding up car manufacturing was those chips. Chips were going, chips were far and few between coming out of Taiwan. Hymix is the company that makes all those chips that go into all the cars. Basically, I know my new Lightning electric truck is basically, a computer on wheels. And so it has a lot of these chips in it made by Hymex, Taiwan company. So yeah, bottom being found. Yesterday evening, we got our end of day signal. We're looking for follow through today. So far, we haven't really gotten it. But when we get our follow through, yeah, and look at the price. The price of this guy is $5.24. I'm pulling up my options lookup tool. Let's take a look. HIMX. I'm going to look at some, maybe a few more strike prices than what we've got here. So notice that Hymex is trading every dollar. So, if options are trading in the more traditional $2.50 increments, that would make this a little bit more difficult. But because this is trading every dollar, we can design strategies with $5, $6, $7 thresholds, and it would totally encapsulate the price action. So I think that's great. I could see myself, let's also see, even though $5 is pretty inexpensive, let's use our options lookup tool to find out if there's a substitute that we can use. Instead of buying the stock, maybe we could find something even cheaper. If I go out to, say, June of 2025, let's see here. I actually really am gravitating towards this $3 call. So for half the price, I can get into this symbol with, we call this an option trading at parity. So for about $2.28 a share versus $5.24 a share, so even less than half the price, I could get into a similar, trade with a little bit of leverage and then sell that premium from it. So I think that this is a fantastic underlying symbol that we're about to get a signal that you either are going to buy shares of the stock and you're going to buy them in lots of 100, or you're going to buy that substitute option, that June 2025 expiration. That's about 7 months away. $3 strike price, pay like $2.25 for this thing. And then once you get back up here, even if you only get up to $6 where we got back up here, you sell your premium, buy your protection. I think this is spot on. This is a great symbol to be looking at.
Yeah, and that $5 price tag looks very appealing.
People with smaller
And
portfolios better have this on their watch list. This will get you into
and
some good trades.
and semiconductors, chips is hot
Not
sector
going
in
anywhere.
coming out of Taiwan, so and it looked like it had a bit of a run up. So I'm adding this one to my watch list. So
You
thank you for
betcha.
that. Thank you for that, Trish, out there in Denver, Colorado. Okay. Second name in our speed round, a name we've covered on the show, I believe, a few times. So
Mhm.
Red, from Topeka, Kansas wants to know what's going on with Teva Pharmaceutical, TEVA. I feel like a lot of the pharmaceuticals have been getting hit with the JFK news. I saw a stat that Pfizer's on the low. Pharmaceuticals aren't getting as much love as they did during the COVID era. That's for sure.
No, right? Teva right now is flattening out. Teva, of course, is the Israeli-based pharmaceutical manufacturer. They manufacture a lot of the generics, though. So I actually think that generics are going to get kind of the highlight here. But if anything, let's come back to a 6-month chart. If anything, I feel like this might be putting Teva on that trajectory that we like, which is some sideways chop. In fact, on Wednesday, we got a bottom signal. We're still waiting for the follow through. We didn't really get follow through yesterday. And then today, we don't seem to be getting follow through. So let's not, I always say, don't shoot until you see the whites of their eyes. Let's make sure we get follow through on our end of day signals. But again, nice price, not as cheap as Hymex, but $17 isn't bad. If I pull up my options lookup tool, let's see if we can find a option substitute, TEVA, show price components, look at all the strikes. We go out approximately 8 months in time. So, we're thinking the June or even as far out as the leap in 2026. But let's look at this June option. I'm looking for this particular value to be below 5% if I can. Or actually, I'm sorry, extrinsic value percentage. I want this to be below 5% if I can. And I also want to make sure that the bid-ask spread is small. And so I didn't find 5%, but I found 6% on this $10 Teva June call. So what that means is instead of spending $17.08 a share, I could get similar movements, meaning this substitute option that's only trading at $7.53. When Teva moves up $1 from $17.08 to $18.08, this will also move up approximately $1. So it'll go from $7.53 up to $8.53. So you get the dollar for dollar movement, but with less investment. So I like this June $10 call of Teva's as a substitute. And so I can see, again, once I get the follow through to my end of day signal from Wednesday, I can see buying either the stock or that substitute option. And then when it goes up a little bit, that's when I make my income trade. I sell my near-term at-the-money call, and I buy a protective put. Usually I buy that protective put with a strike price around my break-even price. If I want to lock in some gains, I'll sell a protective put with a higher strike price. I think this is also a really good one, and you guys are picking out great patterns today.
And you just generally speaking, you're seeing that there's going to be a shift in the more generics versus some of the original names as we go into this new administration?
I think so. I think that, and who knows, right? I think there's a lot of uncertainty about what really is going to go down. There's a lot of hype right now, but I have seen people with the biggest well wishes hit that bureaucratic Washington, D.C. wall and come to a complete halt. But the other thing that's really good, and I don't think I mentioned this enough, Sip, is when you do put that collar on, in other words, when you do sell that premium and buy that protection, that trade goes into a mode of automatic adjustment. That means you don't have to stay up at night. If Teva collapses, this trade automatically compensates and takes care of any movements that are surprises. So the key here is let's get our initial covering position on, and then let's try to get our collar on. Let's let this appreciate however much. It doesn't matter. It could be just 50 cents. It could be $1. Let's not get greedy here. and let's put that collar on, because the minute you put that collar on, it means that this investment's going to work as the timer goes down, and it's also going to self-protect itself. A lot of people don't understand that about collars, and other people think that collars are just that, protection instead of income generators. So I'm kind of marrying the best of both worlds. For those people who use collars just to, hedge risk, realize that you can tweak it slightly and turn a collar into an income generating position. And for those of us that like income generating positions, realize that if you put the collar on correctly, it also becomes a trade that will automatically adjust if the price of the stock surprises us. So if Teva surprises us, it won't be a big deal once we've got our premium sold.
Yeah, very interesting, the whole pharmaceutical debate over the next couple of years, because I know it's a topic that continues to be brought up, and the pharmaceuticals have a very strong lobbying power and advertising arm. So I feel like we're going to see a bit of a battle, and we'll see what transpires. All right, thank you for bringing that one to us, Red in Kansas. Another name that we've covered on the show, a boring name, but something that I'm curious if there's a place. So Henry in Louisville, Kentucky wants to know, AJ, your thoughts on Conagra Brands, ticker symbol CAG. We all need to eat, right?
Yeah. Okay. Let's look at Conagra. So, yeah, you go into the grocery store, the majority of your food, it's funny, people overlook this, but if you go into a grocery store, you see all these sub brand names, but they've really, whether it's Tyson's or Conagra, there's really 3 or 4 big brand names where 80% of the food, 90% of the food in the grocery store is part of their company. Conagra is one of those companies. I see what you're talking about here. You see my bottom signal, and I'm getting follow through today. Conagra isn't necessarily that sideways channeler. This is called fractal patterns, SIP. Fractal patterns is where we look at, instead of looking at the 6-month daily chart, we'll look at the 2-year weekly chart, and we'll see, in the weekly patterns, maybe this is on a different frequency than our usual ones. And I'm kind of seeing what I think Henry is seeing. This is a slower moving, but still sideways channeling. I got to do it. I'm going to look at the 10-year monthly chart now. Yeah, Conagra, for the most part, over the last 10 years, has stayed in the $10 range between $28 and $38, sometimes going as high as 40. Just one time dipping below 26, but otherwise it's in this $10 range. Even though sometimes you have to zoom out to really see what's going on. In fact, I just mentioned 26. This is a great time to buy Conagra. So, Henry, if you're adding to your long-term portfolio, this is some of the best prices that you're going to get on Conagra right now, is around this $26, $27 mark, which was where we're currently trading. And then you could do all sorts of things. You can let this thing appreciate and just sell it right out of there. We can do some options. Let's see. We'll do the same process we did with the other candidates. We'll put this into our options lookup tool, and we're going to go. Yep, they've got a June option. They're trading every dollar. We already talked about why that's really good. We're looking at the bid-ask spread. Again, this isn't down below 5%. That's the target. It's at 8.5%, but the liquidity looks really good. So instead of buying the stock, you could buy this Conagra June $22 call. This thing's only costing you $5.65. So instead of spending $27.17, spend $5.65. Get some leverage in there. And then, you could, this is one where instead of doing the premium selling that we would do on something that's clearly sideways channeling, I might take more of the protective collaring strategy. As soon as this gives me a hint that a top is being found, throw a collar on there. And, people are like, hey, AJ, wouldn't you just sell that outright? And if you do the comparison between selling outright and throwing a collar on there, collars 9 times out of 10 benefit you more. So I never sell stocks outright, Sip. I always do some sort of collar. I always sell a protective, sell a premium, like a near term at the money call, and then buy a protective put. And that gives me that profit center from the option where time just passes by for us.
Yeah, and that's a strategy that I know you've brought up on the show a handful of times.
Absolutely.
And I think Conagra is one of those good diversifiers for the portfolio that's a little bit isolated from a lot of the news headlines and things like that, just because, of the nature of their product. People go to
Yep.
the store, they buy the food, they go back, and it's kind of like a evolving cycle. So
People gotta eat. People gotta eat.
yeah. So thank you for that, Henry. Conagra Brands, nice little setup. Have some potential. Um, okay, AJ, heading into Thanksgiving week, right? Next week is going to be the Thanksgiving holiday. Markets are going to be. I just looked at Alec too. It's a pretty small cap name, so I don't even know if it's got options available.
Let's check. I'm just curious. This is from Doug. Doug just typed this in. Come over here. I see some options. This is the more traditional expirations on options. Let's see if there's liquidity. So this is also the more traditional strike prices. So 250, 5, 7.5, 10. So let's see. There's a 5, and then there's a 250. This one would be really hard to trade options with. The pattern looks fantastic, but because the strike prices are few and far between, and let's see the bid-ask spread. The bid-ask spread isn't so bad. Well, I mean, the 250, you wouldn't trade the 250. This is just the near-term option, the one that expires in December. Let me go ahead. I'm going to pull this on our options lookup tool. It may be give us some sort of understanding. Yeah, no. You look at these options, and this strike price is basically not even viable. You'd have to do the $5. This one, yeah, even that put is not you basically, this would be a full-on covered call play. You buy this stock and then maybe you sell the $5 covered call. But then you kind of have to worry if you don't put that protective option in place. You always wonder about what would happen if this stock worked against you. So not one of my favorite candidates. I love that it's inexpensive in price, but because the options are not as out there, there's not, the option chain is not as mature as some other ones. I think you could find some better ones.
Yeah, and sometimes that's the case. You want a little bit more of that liquidity in there. So
Absolutely.
thanks for that. Thanks for that, Doug. Okay, AJ, heading into the holiday week next week, how do you usually approach it? Are you expecting volumes to be down? Not a lot of movement. Money managers kind of taking the holiday. What do you traditionally see during the Thanksgiving week?
I mean, people will definitely be paying attention to the retailers, right? I've got my trade from last week on Macy's, and I'm going to make sure I've got that premium sold and that protection bought, just in case any of the hype from Black Friday, Cyber Monday, all of these different local Saturday. I don't know. They've got all these different things now. In fact, most of the Black Friday sales have already started. Home Depot's out there doing their thing. Walmart doing their thing. Amazon is definitely doing their thing. But I'll be watching some retailers. Yeah, Friday, I think Thursday the markets are closed. Friday will be a slow day for sure because just investors will be focused on their own things. But this upcoming month of December is going to be a very interesting month. But I'm going to stick with what I said in the opener of the show. Unpredictability is the only thing that we can count on right now. So we just got to trade day by day. And I'm glad that I have that full tool chest of options trading strategies in order to profit on.
Yeah, it looks like we got some new home sales, consumer confidence, GDP, PCE. So maybe Wednesday, it looks like we got some economic news coming down the pipeline. But like you said, heading into December, closing out the year, a new administration, there's going to be a lot going on. And we're here to find ways to take advantage of opportunities as we see them using these beautiful, wonderful tools called options.
That's right.
So thank you, AJ, for your time today. Thank you, everybody, for tuning in. We certainly do appreciate you guys checking in with us, asking some questions, sending us some names throughout the week. So feel free to hit that like, hit that follow, hit that subscribe button. We truly do appreciate it. If you want to learn a little bit more about some the rest of AJ's programs, head on over to tradingtrainer.com. We've got our links page as well, where you could find some of the other programs, whether it's the workshop or the social pages. Head on over there. Otherwise, if you have any questions at any moment, feel free to send the team a direct message, leave a comment. Someone will get back to you. And, we hope everyone is set up for success next week. We won't see you guys till after Thanksgiving. So please enjoy the time with your family, eat some good food, watch some football on Netflix. That's going to be a new thing next week. They're going to be broadcasting NFL on Netflix for the first time. So
do you think it'll crash like they did for that fake boxing fight?
No, because that was 65 million people all around the world. I don't think 65 million people want to tune in to watch an NFL game, because that would be like breaking Super Bowl records.
Yeah,
on Thanksgiving.
That's true. I can't believe that. That was interesting.
But they're getting into the sports game, so that'll be interesting to see. Maybe we could visit some Netflix the day after, see if there's any movement there. But that's it for us. That's it for the show. AJ, thank you once again. Thank you, everybody, for tuning in. Hit that like, hit that follow, hit that subscribe button, and we'll catch you guys next week.
Bye, everybody.
For tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll